Hello everyone and welcome back to the channel. This is Fair Value Finder and today we are taking a look at a requested stock, the Southwestern Energy Company, ticker SWN. This is a stock that I've never heard of before and it trades at pretty low values, around the $5 mark. So there could be some good potential here and we're going to dig in and find out. So we start off with the top line revenue. This is a very important figure. We see that it's growing very quickly, about 7.3% year over year. They did go from $3 billion to $15 billion over the course of these last 4 years. But analyst expectations are for them to come in just shy of 6.5 this year and 6.77 the following year. So it's going to slow down, even out, drop back down. So that is not a good sign. There's not a whole lot of support amongst the analysts. For the earnings, we see that for a little bit, 2020, 2021, they were negative, very negative in 2020, in fact. But in 2019, they came in with $1.65. They came in right about that in 2022. Estimated to drop down to 70 cents this year and $1.17 last year. Even with that, they are trading at a decent multiple, a decent earnings yield, but they are not very consistent in a lot of these numbers, which is a little concerning. Share count, they have been growing their shares, and they have been growing their shares very quickly. 539 million has grown to over $1 billion, and at that rate they'll be hitting twice what they currently have share wise, but in 2025. So it's no wonder that the stock value is being held down so low. They're diluting out all advances that the stock is even experiencing. Free cash flow, at least that does seem to be positive consistently. They didn't have the best of yields this last year, but if they can get back to the 20 to 30 that they had been experiencing, that would be incredible. Assets, they're growing their assets, but they are growing their liabilities faster. So that is one red flag there. Tangible book value is at least positive and growing since 2020. They came in at 3.25 in 2019, and they came in this last year at 4.3. Up not too much over those 3 years, but had dropped down in 2020 to just shy of 500 million. The debt to equity ratio, very high. We don't want to see anything above a 1, so that is a cause for concern. Book value per share, $3.89. The fact that it was trading for $5.60, a lot of its value comes from its book value. Does not pay a dividend. I have 1 cent in here to make the math easier and to not break everything. Their share price, they currently trade for just shy of $6. They have been growing year over year in share price, 28%, 56%, 20%. So they have been outperforming the market. Not too surprising for a small share value such as this. ROE is incredibly high, 43% this last year. 2021, it was negative. As was 2020, 2019, 27.4. So another sign of inconsistency. You know, there's definitely potential to make money with this stock here, but there is not really a margin of safety. There's no consistency. There are a few red flags, so it's definitely not something that I'd be buying. But there is always potential upside. It always trades at a low PE. Right now is the highest PE that I see across the numbers, and it's not even at 10. So a lot of its value comes from its cash flows. And that is followed by the balance sheet, like I said, and then the non-existent dividend, and then the earnings. So the earnings are not good for this stock. Somehow they have great cash flow with no earnings. So that is something interesting. They don't seem to be the best at accounting and spending. I mean, they have seen a bit of growth in the revenue, but that's expected to disintegrate this year. So I'm not sure where they're squandering this money, but with the issuance of new shares and the inconsistency and the very poor earnings, it's definitely not a stock that I'd be interested in. So we'd come up with a fair value as of the end of last year of $8.13, which would be a buy just shy of 7 and a sell right around 9. Moving forward this year, 2023, we'd be looking at $8.85. So it did see some growth in cash flows. I had to adjust that. We are seeing some growth in cash flow. In fact, it is only expected to have a fair value of $7.31. I had to fix the cash flow calculation because it had doubled the previous years. And that would give us a buy at 622 and a sell at 808. So, I mean, if you strictly look at those ranges, it's approaching that buy mark. It's just south of it, so it would be currently in the buy zone. And about a year ago, it had reached into the 9s. So there is potential that it shoots back up to there, but we will have to see about that. We can see what, due to the negative growth in the earnings, the Peter Lynch formula says that this is absolutely overvalued. What I see of it, 2022 came in as a very strong year for them, but they have not convinced either the market or the analysts that that is what they're capable of. So if they can prove that that is what they're capable of, not only will they beat out the expectations and probably see a lot of growth off that, but they would start showing the consistency that I'd want to see from them before I even give them a consideration. So I give it a hold. I might even keep an eye on it because it does seem kind of interesting, and we will see where it goes from here. Thank you for the suggestion. Please comment down below if you have any other suggestions, stocks that you want me to look into. I've got a list of 4 more that I got to take a look at. Subscribe so that you can stay up to date on all of those, and I will catch you guys next time.